It's Tuesday, July 25th, 2023. A lot to talk about today. Please make sure to like, subscribe, and share these videos all over your social media. But tomorrow's the big day. We're going to get a 25 basis point rate hike, in my humble opinion. I think that's 99.9% for sure. And what's amazing is we know, you know, I know, we're in a recession. We are raising rates into this recession as the economy continues to collapse. We've never seen anything like this. But we are now in a whole different world. As the song used to say, Guns N' Roses, welcome to the jungle. We've got fun and games. And it also goes on to say, it's going to bring you down. And that's exactly what's going to happen to this economy. And people think it's all fun and games. A lot of people ignore what's happening every day, but they wonder why they're spending more and getting less, why they can't save money, why they have no net worth, why they can't afford to live a better quality of life, because their purchasing power every day is being destroyed. Another rate hike tomorrow, and people just say, well, who cares, so what? Well, you're going to care if you've got debt. You're going to care if you have to borrow money. You're going to care if you have to buy a house, buy a car, student loan, whatever the case may be. If you have to borrow money, it's going to continue to go up. Bankrate.com today, 30-year fixed mortgage rate, 7.23%. That's with excellent credit, 20% down. 30-year fixed refi, 7.39%. Here's a big problem for America right now, and why so many people are going to be in very, very serious trouble here very soon, is they cannot run to the home ATM. A couple years ago, people, when money was cheap to borrow, they could use their home as an ATM. Everything was going up. Interest rates were very, very low. And so people would go pull a bunch of money out of their house so that they could go and buy a car, buy an Airbnb, have a cash reserve, pay down the credit cards, open up a business, whatever the case might be. Now, people can no longer do that, not at 7.39%. So that emergency money that people thought that they could always run to in those homes, no longer able to do that. And that is going to be a problem, because people now are wondering, where in the world are they going to get money with rates continuing to go up? And the home ATM is now officially closed. Tomorrow's going to be interesting. It really is. But we got some more interesting news today. This comes from wallstreet.com. The most splendid housing bubbles in America, July update. Third year over year price drop in a row. Monthly increases are just seasonal. Robert Shiller. Half of the 20 cities in the Case-Shiller house price index had year over year declines. Seattle down 11.3%. San Francisco Bay Area down 11%. Las Vegas, you know, everybody said, and I would have realtors write me from Las Vegas all the time. Oh, everything's fine here. They're building so many houses. Prices will never go down. Well, they're down year over year 7.8%, and this is just the beginning. Phoenix, another area where people would write me going, oh, it's too crazy here in Phoenix. It's never going to slow down. It's never going to stop. Prices are never coming down. Well, they're down 7.6% year over year. Portland, 5.1%, San Diego, 4.2%, Dallas, 3.8%, Los Angeles, 3.1%, Washington, D.C., 0.1%. These are some of the hottest housing markets in the United States of America, and you look at the year over year declines, and they're pretty substantial. This is just the beginning. They're going to continue, and they're going to get bigger. Pac West, taken under by much smaller Bank of America. Should this be happening in a good economy? I thought the banks were safe and sound. I thought the regulators were regulating. How come now we have another bank going under? So we've had SVB, Signature, Republic, and now PacWest. Who's next, ladies and gentlemen? PacWest is set to merge with Bank of California in a $400 million equity deal. Under the terms of the deal, both California banks will merge into one bank called Pacific Western Bank. The Beverly Hills-based PacWest reported a, get this, $197.4 million loss net income last quarter. Total deposits declined by $290 million last quarter. Who is next? And you have to ask yourself, how fragile is the banking system right now? And everything we are beginning to hear and what we know now about the commercial real estate depression, collapse that we're going to undergo here, how many more regional banks are going to perish because of these loans? And 70% of these commercial real estate loans were done by regional banks. And so we're not going to know, I think, for about another year about just how bad this is going to get. But when we begin to see the foreclosures in commercial real estate and we begin to see the real price, the real valuations of these properties, I think people are going to be horrified. And this is going to come to the housing industry also. But we are going to see one collapse after another. Commercial real estate, housing, stocks. I mean, today, you continue to watch this melt up in the markets. It's almost laughable because it's so fake, it's so rigged, it's so manipulated, just like so much of all this is. I mean, it's all been just carried with massive amounts of debt and artificial injections. And you have to think, if the Fed didn't inject $7 trillion into these markets, where would they be? But we know what it's caused. It's caused a lot of inflation. Do you really believe inflation is 3%? I don't. Let me know your thoughts down below. But this is just absolutely fantasy land where we're living right now. And you got the Fed raising rates in a recession as we enter a depression, and the markets are going up. Think about that. The 10-year bond yield, 3.9% right now, that is creeping up. I truly do believe that we're going to see the 30-year mortgage rate hit double digits, at least for some people. Maybe if you don't have an 800 FICO, for people that aren't putting 20% down, that don't have perfect credit, you're going to see these people forced to pay 10+% to get a mortgage. I just cannot believe people do not see what is coming as far as the housing market. Again, everybody talks, well, there's no inventory, there's no inventory. We have more houses now than we did a year ago, and more coming, but we have less qualified buyers. That's the inventory that we need to be talking about, qualified buyers. I was driving by some of the car lots today, and there are so many more cars on the lots, mainly used cars. Who's going to buy all these used cars as, again, we're going to raise rates again tomorrow. You want to borrow money to buy a car, you need an auto loan, you're going to pay more. While people are working 2 to 3 jobs, paycheck to paycheck, 42% of the country doesn't even have $400, and you're looking at, on average, about 10% plus to borrow money for a used car. And we know now, we're hearing more and more about these repossession numbers, 25,000 cars a day in the U.S. being repossessed. Where are they going to put all these cars? Who's going to buy all these cars? Car repair costs are up 20% over past year. This on CNBC today. 17% of car payments right now are at least $1,000 per month plus. Average car payment now on a new car, $735. New car interest rate is around 6.5%, 7%. Used car, 10% plus. Who is going to be able to do this? Here's another one from Fox Business. Gas prices may spike as much as 10 to 25% this week in some states. I just checked oil. You're looking at a barrel of oil right now, $79.32 a barrel. Everything is attached to oil. Planes, trains, boats, ships that are shipping retail goods from other countries. All of your food is being shipped by trains. It's being shipped by trucks, by rail. Everything is going to go up if oil continues to go up, and you're going to see quite possibly another wave of inflation. You look at what OPEC Plus is doing. They're shutting down a lot of production of oil. You look at, we've depleted 40 to 50% of our strategic petroleum reserves, and we don't even know if we're ever going to be able to refill those things. And so the price of oil, I truly do believe that it is not out of the question or unlikely that you could see oil breaking $100 a barrel this year. I do believe it's going to definitely break $90. And that means the price of everything on those shelves at Walmart, at Kohl's, at the grocery store, everything is going up. And so how are they going to control this next round of inflation when they can't control oil prices? And we're now so dependent on energy. We're dependent on oil because we refuse to produce our own oil. So we're going to see more inflation. And anybody that believes inflation is 3% right now, you need help. You really do. Here's another one. Fed set to raise interest rates to 22-year high after June pause. As I've said earlier, it's going to cost more to borrow money. You're going to carry those credit cards. The average credit card interest rate now is 24.06%. It's going higher, ladies and gentlemen. Auto loans going higher. Mortgage rates going higher. How about small businesses? If they cannot borrow money to expand, businesses cannot, or new businesses cannot borrow money to open up new business, that means that people aren't getting employed or people are losing jobs. You know, we are witnessing now a credit crunch, and that means that businesses can't expand, businesses can't open, and that means that they're going to have to downsize or they're just not going to open. Some will have to close, and this means less people get hired, more people get laid off, and it's going to get ugly. It's going to get ugly, and it's been getting ugly. Think about the federal debt right now. We are going to see the interest rate just on our federal debt approach $1 trillion a year, ladies and gentlemen. And people still think that this is doom and gloom. This is really negative. This isn't serious. I'm exaggerating. Think about an interest rate of $1 trillion a year just to service our own debt, which is getting bigger and bigger. I went to the inflation calculator. I talked about this the other day. You can just Google inflation calculator, put in a number, put in a year. I went back to 2020, $100,000 in 2020. You would need $117,888 to equal the buying power that you had just 3 years ago. There's your depression. There's your inflation right there, and your depression. It's depressing to think that you would now need almost $118,000 to equal your purchasing power back in 2020 of the same $100,000. That is absolutely astonishing. But we're being told that inflation is only 3%, ladies and gentlemen. I was at the grocery store 2 days ago, $1.79 for a candy bar that has gotten smaller, a candy bar that doesn't even taste the same that it did a few years ago. $1.79. Isn't it amazing though? You can take that Mercury dime and you can still buy the same candy bar that dime bought back in 1950. In the 1940s, the 1950s. That same Mercury dime still buys the same candy bar, but that dollar bill does not buy the same candy bar. You know, I was thinking earlier today about so many small businesses, people telling me about how many vacant small businesses they're seeing, vacant restaurants, little vacant retailers, and we're beginning to see another wave of vacancies. And I think about, you know, corporate America. When we pumped in that $7 trillion, when the Fed pumped in that $7 trillion, you know, it went to the very top of the pyramid, and corporate America got most of that. And of course, you know, the average American and small business got the crumbs. But, you know, corporate America got the break. They were able to borrow money for next to nothing. They were able to lock in rates. They're sitting on a pile of cash, and they're going to do whatever they have to do to weather the storm, while the small business owner didn't have these tools, didn't have this ability, and they're not sitting on a pile of cash right now. They're looking at interest rates going up while these big corporations were able to just sock away a ton of cash, lock in rates back in 2020, 2021, very, very low, and they knew what was coming. They knew that an inflation tidal wave was coming, and many of them prepared for it. But my question is, and what we're seeing with corporate America doing is, I think we are really seeing some gouging going on. Corporate America raising prices on literally everything. Question is, I ask of all of you, is what happens when the average consumer, the average American, no longer can buy this stuff? When demand drops, what is going to happen to corporate America, because corporate America does depend on you and I. And when the average consumer demand drops, corporate America is going to be in very, very big trouble. So this is going to be very interesting to see how this plays out with commercial real estate, with housing, with corporate America. So many aspects of things and how it's all going to play out to the average consumer. But again, you know, the stock market, to the commercial real estate depression, to the banking volatility that we're seeing now, a fourth bank going down, all this. I've never seen anything like it. There's so much volatility and so much unknown out there, ladies and gentlemen. And, you know, people always ask for advice, and I can't sit here. I can't take the responsibility and give anybody financial advice. All I can do is share with you what I'm thinking, what I'm doing. It may be wrong for you, might not be right for you, but I'm just sharing off the top of my head, sharing with you what I'm doing on a daily basis, what some people in my circle, my friends are doing. But I think this is a really dangerous time to be taking chances, to be taking risk. You've got the average retail investor jumping into these markets, and you're watching them melt up. And I'll tell you, we've watched this happen before. Watch how fast they can pull the rug out. Here's another one from Fort Worth, Texas. Craftsman Factory shows challenges of reshoring manufacturing. $90 million facility in Fort Worth, Texas. Craftsman Tools, done. I don't know how many employees it employed, but it looks like they are done. And so a lot of that is, again, a reflection of the economy. How many people now really need tools? We're not building anything here in America. We're not making anything. People are losing jobs. And a lot of people just aren't even going to work. And so, again, this is just another reflection of a downturn in the U.S. economy. And I would think that if the economy was booming and people were working, that this plant, this factory would not be shutting down, but it is. Death of family, half of children not living with both parents by 14. This is really, really sad. If you had the luxury or the blessing of growing up with a mother and father, don't take it for granted. A lot of people wish they could have had that. And I think that it's really sad that we live in a time now where people don't have a family. They don't have a mother and a father. And I think that with what we're seeing as far as crime and moral decay and the decay of society, this all starts at home. It really does. And without a mother and a father, that child already is at a disadvantage. And that's not to say because you don't have a mom or dad that you're going to grow up to be a bad person, or you're not going to grow up and be successful. Many people do. Everybody has free will. But I think, like, to give somebody the utmost advantage, to put the odds in somebody's favor, a mother and father is the primary goal of growing up. And I just feel like if you're a kid, you're just being ripped off if you don't have both. But that's not an excuse to commit crime. That's not an excuse to not be a productive citizen. That's not an excuse to not be successful. But I just believe that every child deserves a mother and a father, and I think it gives that child an advantage. And that doesn't guarantee, because there's a lot of people I know with mothers and fathers that turned out to be bad people. But when we look at statistically, people in prison, people who commit violent crime, people who just mooch off the system, many times statistically, they come from a broken home. And I just think that kids deserve to have both parents, and especially a male. You got to have a father figure in the household, because we are looking at males today, young males today, being locked up, the drug use, the violence. Again, it starts at home. When you have no structure at home, no male figure, nobody to tell you what's right and wrong, you're going to have a problem. And so that's pretty apparent. So that's really, really sad. And here's some good news today. We're going to end with some good news today. Lowe's rehires woman who was assaulted and suffered black eye while trying to stop alleged shoplifters. It says here, after senior management became aware of the incident and spoke to Donna Hansborough, we are reinstating her job. 13 years of employment. She was fired. Now she's reinstated. I think the backlash is what really pushed Lowe's to bring this woman back, and rightfully so. And I think people have to keep voting with their wallets. People have to keep being vocal. We can pick and choose where we want to shop. And Lowe's did the right thing here. And I applaud them for doing the right thing. And I think that that's some good news today. So God bless Donna. I'm glad she's got her job back. And I think more people wish that they had such committed employees like Donna Hansbrough. But I'm going to leave it there today. We'll see what happens tomorrow. I'm not expecting anything too exciting. I think what we really have to pay attention to is what Jerome Powell says at the meeting after we get the rate hike tomorrow. I think that's going to be the most important thing, is what he says. If he hints that we're going to have more rate hikes this year and possibly next year, I don't think the markets are going to like that. If he talks about a pause, if he becomes very dovish, expect the markets to go up tomorrow. But these markets are looking for any hope. The algorithms are looking for anything to believe in. They're looking for any type of hope, any type of good news. They're looking for anything. They're not looking at the real economy. They don't care if you have a job. They don't care if you lost your job. They don't care if you're working 3 jobs. They don't care if your wages are not keeping up with inflation. These algorithms are just looking for any hope, any good news, so that these markets can go up. These markets are as fake as a $3 bill, ladies and gentlemen. They really are. But it'll be interesting anyways to see what Jerome Powell has to say tomorrow, what his outlook is on the markets. And, you know, they're so careful with every word. He can't even really speak for himself. He has to read everything off of a piece of paper, because he just has got to be so careful. But you know as well as I do, things are so bad out there, and they're not going to get better anytime soon. So you need to be preparing. You need to be your own central bank. You need skill sets. You need to be putting away gold, silver, cash, food, water, security, everything across the board. Don't get complacent. People are looking at that stock market and going, oh, see, everything's fine. Everything's okay. It's not. You know it's not. You know it's not. You look at that your savings account at the end of every month. You look at your utility bills. You look at your food bills. You're writing the check for the car payment, the rent, the mortgage. I mean, we are now approaching 40% of people's income going to a mortgage. That is completely unsustainable. When people say nothing to worry about, I think it's time to worry, because there is way too much debt. People are swimming in debt, and they are one little accident away from being in very, very big trouble. And that's why we're going to continue to see more people in the streets, more homeless, nobody getting any help. The help that we really need is we need tax cuts. We need manufacturing jobs. We need to open up these pipelines. We need to start producing energy here in America, just to start. That's what we need to do. And we need to start giving incentives to small business owners or to small businesses, so that people start opening up small businesses. We need to start absorbing some of this vacant real estate that's just sitting here producing no revenue, no taxation. How in the world are these cities going to pay for their pensions, their firemen, their police, the trash collectors, the teachers, when all these buildings are going vacant? A lot of questions out there, and I don't have all the answers, but sooner or later, this is all going to come to a head, and we're going to find out. God bless all of you. Again, please like, subscribe, share these videos. And as always, I look forward to speaking with each and every one of you very, very soon. And that will be hopefully tomorrow, God willing. Talk to all of you soon.